All right, we're back with you. I'm Marlon Bowling, your tour guide to the ag commodities, and I am joined by Brian Hoops, and he is with Midwest Market Solutions in Springfield, Missouri. And Brian, we had overnight export sales this morning. You know, we're finally getting the mill rolling, as they say, and starting to crank some of these out. It seemed like the trade was getting a little anxious about that when it was going to restart again. Maybe we have primed the pump, as they say. So we had corn sold to Mexico this morning, 182,880 tons worth, and soybeans, 132,000 tons to China. Soybeans, another 130,000 tons to unknown destinations. So several items chalked up on the list here today. Is that finally something to where now we can get a pretty steady flow of exports again?
Well, good morning, Marlon. We certainly hope so. You know, this is a fourth consecutive day of a soybean sale, so we're great to see that we're seeing more strength here. Additional sales coming on all the time, and I think the market's going to be anticipating that we'll see additional sales going forward on Wednesday, Thursday of this week, especially ahead of this big supply and demand report that's coming out on Thursday. And you know, it's not a major market mover, but it is one that we would expect to see some surprises from the USDA, maybe some lowering of wheat numbers from Black Sea region and Russia, maybe lowering of a Brazilian corn crop is kind of your main features. And of course, a yield estimate for both corn and soybeans here domestically. And I think a lot of the trade is anticipating we're going to see a lowering of those yield numbers on Thursday's report.
Well, I know when those numbers came out this morning, someone walked by and kind of facetiously said, well, with a corn export sale, it'll probably be down today. And if we take a look at the prices, they actually hit it right on the head. You know, it used to be the case last year. I remember every time we had an overnight sale announcement, the market would go the other way. Let's take a look at what we're doing here right now. And on the corn, we are lower, but not by nearly as much as we were at the open. Down a penny and a half on December at 5.52 1/4 per bushel. On the soybean market, you now have November trading 10 1/4 higher at 13.40 per bushel. So now it's starting to get its second run underway. We're within 3.5 cents of our high of the day now. There for a while, it was sagging off of the strong open that we had. After the open, I believe it was up about 11 or 12 cents there for a little bit. And looking at the wheat, in the wheat market in Chicago, our quotes provided by bar chart showed December 12 1/4 higher at 737 1/2. On the hard red winter wheat in Kansas City, we're up 10 1/4 on December at 723 3/4. And on the spring wheat market, well, you have the December now 4.5 higher, right at exactly $9. Now the spring wheat harvest, of course, is well underway, and USDA in their weekly report yesterday said that we now have 38% of the spring wheat harvested. And that would compare to a 5-year average of 21%. So way ahead of schedule as far as their harvest activity. And of course, we all know that's probably because of the drought conditions. But I know you have offices in the Dakotas. What are you hearing as far as the crop coming out of the field, yield-wise and quality-wise?
Yeah, good question. A lot of people asking about that same thing. Some clients that are actually harvesting wheat in the Dakotas, Montana, are saying that they're a little surprised that yields are as good as they are for spring wheat, you know, maybe a little bit above expectations. But there is a lot of blending going on. There's a demand for the winter wheat product, and they're mixing some of that with the spring wheat, and that's trying to improve quality, trying to get protein levels to a certain area. And so there's a strong demand, I think, for the winter wheat contracts, not only because of that blending, but also what we talked about, what's going on overseas. We're going to export more wheat this year, likely because of some problems with Russia and the Black Sea region. And that wheat is more of a Kansas City, Chicago exportable variety. So I do think you're going to see Kansas City, Chicago gain against Minneapolis here during harvest time frame. And I wouldn't be surprised to see this market, you know, creep its way higher here. But Minneapolis, if we do see better yields, I think that would be a surprise to the trade. But as we move into central North Dakota, that's an area that's been really damaged by drought-type conditions. And I think that is an area that will really uncover some very poor yields if there's anything to harvest there at all.
And this is in the face of a stronger U.S. dollar. The dollar index up 122 points on September futures this morning, 93.060. We'll come back and we'll take a look at our livestock trade with Brian Hoops right after this. Well, live cattle have been kind of jumpy here today. Let's look at what the market is doing right now with our quotes provided by Bar Chart. Live cattle still have August and October showing gains of at least $1. October exactly $1 higher right now at 128.47 per hundredweight. Now that has backed up off of its earlier high of the day by about 70 cents or so. December live cattle up 75 cents at 133.65. And meanwhile, in the feeder cattle trade, let's go over there. September 7 lower at 163.12. That is now about $1.15 off our earlier high of the day. So we have seen a lot of backing and filling all of a sudden in the feeder cattle market. October is 20 higher though, and all the deferred contracts, October on out, about 20 to 37 cents higher right now. So that's kind of interesting. The back end leading the way higher. Lean hog trade. October yesterday was down $3, so I'm not totally sure. We may be in expanded limits today. Since that was the only month, I'd have to check on that. October down 60 cents in follow-through selling today. We're at $84 even. There for a while, it had been about 60 higher, but that didn't last very long right at the open this morning. The deferreds, December on out, over $1 lower. Brian, on the livestock trade, we have this strength in the cattle market led by the nearbys, but feeders the other direction. It's the deferreds leading. Why?
Yeah, strength in the cattle market coming primarily from a string of cattle that traded. They trade every Monday. It seems like a regional packer comes in Nebraska regions, pays up for some cattle on Monday. It's not really a market-making trade, not enough volume, but it certainly gives you an idea of what the packer's thinking or leaning towards for the week, and we're seeing the futures market react to it. That cash trade was at steady to $2 higher in on a live basis and $2 to $4 higher dressed. So it was very positive, and we're seeing a nice reaction by the futures as a result. The also other thing that the trade is looking at is the smaller show list this week, about 9,500 heads smaller than a week ago, and that's giving a boost to the futures market. So we're strong in the front month cattle. The feeder cattle, they're trying to rally along with live cattle, but they're kind of sensing that maybe this corn market is trying to stabilize or move higher, and we're already at contract highs in some of those feeders. So not a lot of interest in buying the market at these contract highs or near these high levels. Certainly not what we were seeing in the live cattle complex.
Very good explanation. Appreciate the help. Thanks, Brian. And we'll talk with you real soon. Brian Hoops of Midwest Market Solutions. He's based in Springfield, Missouri. Christina, back to you.